a realtor and talk show host all in one. Get tips, advice, and valuable lessons from the successful and rewarded Sotheby's Vice President, Jennifer Hammond. With more than 20 years of real estate experience, she'll make it look easy. Here is Jennifer Hammond.
Hello. I'm Jennifer Hammond, and I'm here with Linda DeMarla, our tax expert, who's giving us kind of the insights on how to help you be more successful when you're doing your taxes and not leave any of that cash on the table. We want to make sure that they're really taking advantage of that. So one thing everybody has is a car. Well, most people have a car. So what about car deductions, Linda?
Okay, this is one of my favorite things to talk about. And usually it's the men who are even more interested than ladies. But there's a lot of ladies who need to know about deducting their car also. Now, of course, if you have a regular, ordinary job, and it could be anything you want it to be, and you just drive back and forth to work, normally you don't get to deduct your car because that's considered commuting. Okay, but if there's any chance that you use your car for business, whether you're self-employed or even if you're using it to work for your employer, then there's a good chance that you're going to have some car deductions. Okay. So would you like to know one of my favorite ones?
Yes.
Oh my gosh, this is the most overlooked car deduction in the whole list. There's a huge list of them. It's the interest on your car loan.
Oh, wow.
Did you know you can deduct the interest on your car loan if it's a business car?
If it's a business car.
Yes.
What about leasing? What's the difference between that and leasing?
Very good question. Now, of course, when you're leasing a car, you'll pay a leasing payment rather than to the bank.
Right.
So you can deduct a good portion of the lease that you pay. However, if you lease a car that's worth more than, let's say, about $20,000, then the IRS says, oh, you have leased what's called a luxury car. I know, it doesn't seem like you can get a luxury car for only 20.
Yeah.
That's right. So you will not be able to deduct all of the lease.
Okay.
But you will be able to deduct a good portion of it. Now, I don't want you to just go out and lease a car because you have a business car. There's some cases where it might end up costing you more. You know, a lot depends on whether you're going to keep the car for a long time or whether you do a lot of driving. So if you do a tremendous amount of driving, you might be better off to buy the car than to pay the leasing fee. And also, if you are going to keep the car for a long time, well, that's sort of what I do. I usually go out and I lease my car for, let's say, 36 months or 42 months. And then at the end of the lease, I like the car, and it still doesn't have a lot of mileage on it. So what I do is I buy it from the leasing company, and then I continue to own it. And then at a certain point, when it gets older, then I'll sell it. And if I have a gain, of course, it's taxable, which I would like to have.
Yes.
It's good to have a gain.
Always good to mean you made money.
Yes, good to pay tax. I never complain about paying tax. Usually means there's a profit, at least a cash one. And then, of course, if you sell it at a loss after having leased it and then owning it, then you can deduct that loss in full the year that it happens. So keep this in mind. If you buy a stock or a bond or, God forbid, a piece of real estate and you sell it at a loss, you cannot deduct the loss all in 1 year if it exceeds $3,000. You can only take $3,000 each year up to your gains. Then, but with a car, because it's a business asset, that loss is fully deductible the year that you sell it. So that's probably the upside of having a loss. But getting back to deducting the actual car, now, you don't just get to claim the deductions. There's a little homework involved. It's called the mileage log. And there's many apps that you can get. You can put them on your computer, and you can also put them on your iPhone or your cell phone, whatever you have. And they'll keep track of your driving. They know how many steps you've taken or how many miles you've driven. Right?
They always know everything. It's amazing how much the apps know.
Yeah. So you can get an app. Some are free, some you can pay for. And then you're supposed to know how many miles you drove the whole year. So let's say that Jennifer, who's a wonderful realtor, let's say that this year you tell me that you've driven 20,000 total miles. That includes everything, whether it was for fun or being out with your family, whatever it is. Although if you go to lunch with me, that's business.
That's
anyway.
business, exactly.
But what happens is you Keep track of the total mileage, and then you'll also need to keep track of how many of those miles were for business purposes. Now, let's just say that during this year, you've been a good girl, you kept track of everything, and you tell me that 2,000 miles you were having fun, strictly fun, no business. But the other 18,000 miles, what were you doing?
Working. I was
Yes.
showing real estate. I was doing work.
Yes,
So that's
right.
deductible.
That's right. Even if you just went to the grocery store and bought some supplies for your home office, that's all it takes.
Or for my open house. I might need to
Yes.
go get some flowers and some beverages for my
Yes,
open house.
you know, bottles of water. If it's an
Yeah.
empty open house, you want to take some toilet paper. But in any case, that 18,000 miles means that 90% of your total miles, the 20,000, was business use. So now we have the percentage. Now, what do we do with that percentage? We have two choices. We can either take 90% of all of the expenses for running your car.
Yeah.
This would not only include, of course, the interest on the car loan, but gas, oil, lube, tires, warranty, washing and polishing, anything else you can think of to keep the car going, towing, God forbid if you have to have towing. But 90% of all those expenses, including personal property tax on your car if you happen to live in Virginia or a state that has personal property tax. And of course, you get to claim 100% of all of your business parking and tolls. But maybe Jennifer's going to say, well, I'm lazy and I don't feel like keeping gas, oil, lube, and tires and all that. Well, we have choice number 2. And that means we just take your 18,000 business miles and we multiply it times the cents per mile. Now for this year, which is 2017, you can deduct 53.5 cents per mile. So that means we would take your 18,000 miles times 53.5 cents per mile. But to that number, whatever that number is, we get to add 2 things, actually 3. No matter what, you're always going to get to claim your parking and tolls. But we also get to add 90% of the interest on the car loan. So no matter which way you claim the car, you always get the interest on the car loan.
Yay!
Yes. And you also get to add 90% of the personal property tax. So if you live in a state that has what's called an ad valorem tax, means the tax is based on the value of your car rather than just owning the car, then you'll also get that. So 2 choices, 90% of all your expenses, whatever they are, plus 100% of your business parking and tolls, or 18,000 miles, or that's 90%, times the cents per mile, 53.5 cents per mile, plus 90% of the car loan interest, 90% of the personal property tax that you pay, and 100% of your business parking and tolls.
Yay!
2 choices.
So car deductions, there's something that most people overlook. So very important to know this.
Yes, especially the interest on the car loan. Because normally if you have a regular job, you drive back and forth to work, and what happens? You can't deduct it, it's commuting. But now you've become a self-employed entrepreneur. You could be a doctor, a lawyer, a realtor, insurance sales, anything that requires the use of your car. Well, now that car loan has become a business car loan, so the interest is also deductible. Don't leave that out.
Yeah, and I was going to say, so many people have home-based businesses, so this can really be a great thing because then again, they can find all of this depending on what they need their car for. Maybe they need a truck. For instance, if they're a musician and they all of a sudden need to be able to carry their equipment from one place to another, they might need a different kind of vehicle.
That's absolutely right. And you know, a lot of my clients that are musicians, they'll have like a van for all of their equipment and then a regular car. But they may use their van 80 or 90% for business, but they also use their car 50 or 60%. So instead of taking 100% of one vehicle, you're better off taking 80 or 90% of one and 40 or 50 of the other. So that's more than 100.
Which is good.
Yes,
Again,
yes.
if you know the tax code, or if you have someone who is on your team, as I always say, you need an A team. So make sure you have a tax person like Linda. And again, Linda's with Tax Masters in Rockville, Maryland. We'll make sure all of her details are up there for you. And you want to make sure Linda's on your team when you're looking for somebody. I'm in real estate. I'm licensed in DC, Virginia, and Maryland. And we're happy to help you with all of your questions with taxes and real estate. Thank you so much. We'll see you next time.
Thank you for listening to Jennifer Hammond's podcasts. If you liked what you heard, leave a comment or like on iTunes. For more information, visit her website at jenniferhrealty.com.